Hey guys, Tony Benson here with Wealth Builders HQ and creator of Patterns in a Flash. We're going to do the review of the pattern of the week from last week. But before we do that, let's get the disclaimer out of the way. I am not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. So we looked at a head and shoulders on ZIM last week. ZIM. ZIM, is it Zimmer? ZIM Integrated Shipping. I'm not sure what ZIM stands for, but whatever. I don't care what the company does. Give me a ticker symbol and a chart, and I am good to go. Now I can't remember what day it was exactly. I think it was the 28th, I want to say. We had the beginnings of a head and shoulder. It did break down below the neckline, but then it came back up. Now we actually have an even better, it's better and worse. We've got a little bit of down-sloping neckline, which I don't like. Now that we've got a pretty well-defined right shoulder now, as long as it continues to fall. The challenge to this one is we've got earnings coming up here in 8 days, it looks like. So 5 or 6 trading days. So I'm not terribly excited about it from that perspective. One of the things that could play out well, which I've done in the past, is, and this is just an idea to plant a little seed, if you happen to trade the bear side of this, if you buy enough contracts to where you can close out, let's say you buy 5 contracts, and you can close out 4 of them and get all your initial capital back. So let's say you put $2,000 into the trade, and you can sell 4 of the 5 contracts for $2,200. It moves in your direction the right way. You got all your money back, plus a small profit, right? And then you leave 1 contract there and hold it over earnings. Now you have virtually no risk on the table, right? Because you've got all your initial capital back. Now, if it moves big in the direction you want it to go, whichever way you're playing it, in this case, I would be playing it down. Then if it moves big, then you make even more. Right? I did it on Home Depot, I think it was last earnings season. I had gotten all my capital out of the trade and then some. I actually had a profit, and I left 1 contract sitting there, and earnings came out and gapped down even further, and I made even more money. So it wasn't a monster trade, but it was still better than it would have been had I just closed it all out. So that's always a good place to be in. Just an idea, something to think about. It doesn't always work out that way, but if you can pull it off, it can be really pretty. Quick look back at the other ones that we've done in the previous parts. Abbott, this is one that just hit the entry point today, but it was down a bunch. I wouldn't be excited about getting in this right now. It is possible it just falls off a cliff and continues to go, but I would say the odds are higher that it's going to bounce a little bit. I'm not sure if that's the final volume. I think it is for today. We are fully updated. Chewy, this one worked out beautifully, but it's gone now. I need to pull some of these off the list, actually. Cisco is still, that's a little too low. I need to take that off. I stopped out of that one the other day. Had a tiny little profit. Had gotten out of some here, jockeyed in, jockeyed out. I think I made $100 on the whole deal, so it was basically a break even overall. CVS, this one is still on the radar. Actually, head and shoulders, there is still some potential there to the downside if the market continues to fall, but I think the odds are we're going to bounce. Maybe another day or two of downside, but we'll see. It's hard to say. Keurig, this is one that's still in a symmetrical triangle. I think that if the market does bounce, this one could take off and run to the upside. I don't think it's super likely, and it would have to run. By the time I got to it, it'd be too late anyway. This is not a high flyer. I don't like it that much anyway. So MFC, this one played out beautifully. Another one needs to come off the list. Earnings is coming out too. I should have pulled most of these off the list, it looks like. Novavax, this one worked out really well. That vertical line is where I highlighted this as a pattern of the week. And you can see it actually went and hit the target and went beyond it a little bit. So I missed that. I got out basically right, just slightly before the target. I got out some of it before that. I got out halfway down, got out of half my position, and then it kept on dropping and pulled the rest of it. That one day it hit the target, started to bounce, so I pulled out there. Healthy little profit, though. I think got 40 or 50% for, 3 weeks or so. Not too shabby. And then Zimmer, which is one we looked at last week. So that is it. We will have fewer next week to review, but stay well, stay happy, and just remember, if you're going to fail at one thing, fail at quitting. Take care. God bless. Bye-bye.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I put together just for you.